Welcome to the ASX edition of Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the ASX 200. I'm also going to have a look at silver, copper, and uranium. And as well as that, I've got a special mention about Thursday's most watched stock. So make sure you stick around for that. I'm going to cover the S&P 500 in a separate video. I'll leave a link for that in the description section below. As always, this is general commentary. It doesn't take your personal situation into account. With all that said, let's get into our first chart. So here's our chart of the ASX 200. And this has been such a difficult market for really the past 2 years now. And the last 6 months, or with this price action we've had in the last week, it just goes to show how tough this has been. We've had false breaks to the downside, we've had false breaks to the top side. And it's look, it really is a directional market. This rally we had off the July low was looking really encouraging. But the extent of this pullback, which has really accelerated over the second half of this week, it really has negated much of the positivity that we had from the rally. We're back below the moving averages. So I've got the 50 and the 100-day moving averages back below those averages. And as I was saying, it really is a market that's lacking direction at this stage. For me, it's really going to take a break back above. You can see this resistance band we have here at around 7,400, just below 7,400. So for me, it really takes a break above this sort of area to start to re-engage some sort of upward momentum. We're just waiting. We're really waiting for a rally to gain traction. We've had several attempts at rallies over the last few months. None of them have been able to gain and sustain traction. And until that happens, I'm just not in a hurry to do a lot. Stock-specific situations, sure, I'll have a look at those. But as a general proposition for the market, this isn't a market that we need to hurry to do stuff. We can't make stuff happen just because we want to do stuff. We've got to wait for the setups. At the moment in the ASX 200, the setup is just not there. Having a look at the small ordinaries, and well, look, it couldn't hold its support last week. It's back below support. The support came in at around 2,840, back below the moving averages, and we're just moved into the lower end of this broad range that the market's been in since June last year. So a very long period of tracking sideways. And it's interesting just over the last few months since March that the market's really been coiling, moving in a narrower and narrower band. And that's also true if you go back to June last year. We had this constant narrowing and constant coiling. So it's going to be interesting to watch whether the small orders can find support at the lower end of this smaller range, which is bounded by the blue lines. Interesting, we can find support there, but really we just need to wait until we get a breakout from this range. First a small range, and then this larger range bounded by the green line. And like the ASX 200, we need a rally to gain traction, and that's been something which has been absent for some time now. Now, if you're getting some value from this, please hit that like button. Please leave that short comment. Just, hey, thanks for the video. It's all I need. Just tells YouTube you're watching and you're engaging, and YouTube shows other people. Hit that subscribe button if you haven't already, and come and visit me at motiontrader.com.au and see the sort of stuff that I'm actually doing with algorithms and trend followings that might be able to help with what you're doing with your portfolio. Now, moving along, I want to have a quick look at this. So this is this Vanguard Asia ETF ex Japan. It's something I've talked 2 or 3 times over the last month, and I want to quickly revisit it because it's really starting to not work out. This was such an encouraging break to the top side. We had this big 6 months range, broke to the top side above the moving averages, and it's only now taken about 2-3 weeks for it to come back and now be back below the breakout point, and it's really on its last legs now. It's just sitting on the 100-day moving average. It's looking like this is going to be a false break. and not an opportunity that plays out despite the promise that it held when I brought it to your attention. And it was interesting during the week. I had a YouTube comment came through on the comments on the YouTube video, and a guy said words to the effect of, "How's your emerging Asia ETF looking?" You know, knowing exactly how it's looking, it's not working. But it's look, it's funny. I've got a couple of regulars who don't really get what I do, and as soon as something goes against what I said could happen, they're quick to tell me about it. And look, that's all okay. The fact is, not everyone gets it, and it's if everyone did get it, it'd be harder for those of us who do to make money from the market. So look, it's okay. People don't get it, and you know the thing is, this isn't a game about being right all the time. It's not a competition about who's right the most. It's about how much you make when you're right, and then not losing much when you're wrong. So this isn't what we call an asymmetric setup. It had the potential to go a long way, but if it doesn't, hey, what's your downside? It's relatively small. That's the plane. That's what I'm looking for. I'm looking for these asymmetric setups. But an asymmetric setup isn't a guarantee that they're going to work. Plenty of them don't work. And that's okay. It's all part of the process. It's like you might remember back in May, I told you about this breakout in the Nikkei. So this is the Japanese Nikkei. I told you about this breakout in the Nikkei, and that worked beautifully. That was a terrific asymmetric setup. But as I say, they don't all work. That's why we use risk management, and that's why we don't bet the farm on any single breakout, because we don't know how any single breakout is going to work. It's about playing a strategy over time, over and over again, a strategy that's repeatable and has good asymmetric risk reward. That's how you make the money. And but look, moving and look, the other thing just to remember is I don't predict the future. I don't know what's going to happen, and I'm here to discuss possibilities with you. So that's my role, discussing possibilities, not telling you what the future's going to be, because as I say, I wish I knew, but none of us know. So anyone who tries to tell you they know what's going to happen next, probably best to maybe if you've been around for a while, you'll probably know what to do. So let's move along from that. Silver. I'm going to have a quick look at silver this week because look, there's not really a lot to report in gold. Silver's looking silver's interesting. It's one I don't normally talk about, but I'm just wondering, it's like just compressing that data a bit. It's like a similar but weaker version of gold over the past couple of years. So what's possibly happening here that I just want to draw your attention to is like we've got this contracting range. Well, it's potentially a contracting range which is forming. It's too early to really call this a low point at the moment, but just say the market did find some support somewhere around here. You end up with the impulsive upward leg. Then you've got this sideways, possibly consolidation. As I say, this isn't a valid point at the moment. It could fall tonight, and it really does start to invalidate that quickly. But if it were to find support there, this is the sort of situation where you could see like some upward price action develop within this range. I'm just having trouble making that stick. Here we go. And then you look for potentially a breakout. So look, that's saying to just keep an eye on silver. Again, not a prediction, just possibility. Just keep an eye whether silver holds its ground over the next several weeks. If it does, it starts to firm up this point on this lower boundary, and then like, do we get a repeat of this move that we had during March? Could that repeat again? So yeah, silver's an interesting one just to keep an eye on. Going over, having a look at copper. Well, it's continued to weaken through the week. It had an extension of this downward move midweek. Copper, we've got these moving averages. We're below the moving averages. We're broken out of this bearish pennant formation. It's just one to, I think there's no hurry to be getting involved in copper. I like the longer term outlook for copper, but price action is not supporting that at the moment. It's just one to just keep watching, be patient with. It'll there'll be a great opportunity one day, but we just got to wait for it. Let the price action tell us when. Uranium, not much to add today. Just really quickly, it still looks constructive. We did get a sharp pullback midweek, but then we got a strong rally on Thursday. It's look, let's just see how this plays. But it's a case of will uranium just do some back and forth sort of work and then potentially move higher. But let's just see. Let's see whether it can continue to. Let's see if it can hold this low from through the week. But it does still look constructive. Now, just quickly, I'm just going to finish with one stock. This is a stock called Core Lithium. It was one of the hot stocks from 2021, 2022, and came up on my screen on Thursday. It was the most watched stock on the SelfWealth platform. So I use SelfWealth for my broking. They've got great service, low cost, well worth having a look at if you're looking for a broker. So it's come up on the screen, and I have a look why it's the most watched. And it's the most watched because it's down 25%. Fell 25% in one day. That being Thursday. And so I guess people are watching it because a lot of people have got this Core Lithium in their portfolio. But I've got to tell you, this was such an avoidable disaster. Really, the whole thing, most of this year has just been an avoidable disaster. So just looking at these moving averages, looking at the share price, here's the high, the November 2022 high. Core Lithium's been trading below the moving average for most of the year. Had an excursion above it in around May, but the moving averages never crossed. So for me, that doesn't give a buy signal. There's been no reason to buy this stock all year. So if you're using my Motion Trader service, you wouldn't have got a buy signal for lithium this year because there's nothing to trigger a signal. This is a stock in a downtrend, and it's the other thing to note with this is even if you did have Core Lithium in your portfolio, it's all about then having an exit strategy. If you've got an exit strategy, this sort of thing is completely avoidable. There's no reason anyone should have been buying Core Lithium in at least the last couple of months, and there's no reason they should have been sitting through such decline and even been exposed to this 25% drop. An exit strategy gets you out of stocks which are moving against you. Like from the high to now, this is down something like 78%. It's been an extraordinary loss of capital for some people. It's just so avoidable. And in my mentoring report, which so part of my Motion Trader service, I do the daily trade signal stocks showing momentum, and then I'm also doing the weekly report out each Friday, which passes on talks about the process that I use, talks about my experience. My experience helps members learn to do what I do. This week's report was all about avoiding this exact situation. It was all about exit strategy. And it's like everyone seems so keen to hear what the latest buy tip is, but when do you hear about selling? When have you gone to one of these online news services and seen three best selling ideas for next year? It's like everyone's talking about when to buy, but it's knowing when to sell, which is just so critical to having a strong portfolio. And it's your strategy to sell that can make all the difference in avoiding these absolute disasters, which are, as I say, completely avoidable. So let's leave it there for this week. Enough of that. Thank you for joining me. It's been fun talking to you as always, and look forward to coming back talking to you next week. Until then, bye for now.